Hi everyone, welcome to the channel. Today we're going to be looking at Netflix, the stock. We're going to be looking at some charts. We're going to be looking at the recent performance and some of the stuff, and just talking about topics around the stock from an investment perspective. And we're going to, get down to business and see if it's something you may be interested in. I'm sure almost all of you have heard of the actual company Netflix. I would assume you'd have to be under a rock. Some of the stocks I go over are more maybe you haven't heard of, or you've heard of in passing, but don't really know what they do. So I don't think Netflix is one of those. So whenever I like to look at a stock for the first time, I like to look at the 1-year charts, the 5-year charts, mostly the 10-year, but also the all-time. So 10-year would be 2014, so about 60. So yeah, no, that's pretty incredible performance. Obviously, I guess one thing that sticks out is 2021 highs were pretty crazy. Lots of stocks hit highs that, but also because of COVID, everyone was, clearly doing all their jobs and things not. So everyone was locked up during COVID. So a lot of companies had kind of irrational highs, but also it had an insane fall. And I kind of remember this when it happened. I didn't want anything to do with the stock. I didn't really have ample capital to invest at the time anyways, but that was definitely an event. I mean, it slid and lost 66% of its value within, 7 months? So that's pretty crazy. But no, since 2014, this stock has 10x'd pretty easily. Going from 60 to 719. So nothing other than that blip sticks out to me. But even then, the performance has been fine. 1 year, 5 year. I mean, basically since those 2022 lows, it's been on an insane run upwards. I mean, it's more than 3x'd over that time frame. Well over, because 180 to 720. And it just really keeps winning. I'm not a TA guy, but, when they draw that chart, look straight up, or whatever, they have that, I don't know. If you know TA, you know what I'm talking about. If you don't, you're going to think I'm talking mad. But let's take a look at the PE and the forward PE. I like to look at multiple different websites. I know you can find that information on Yahoo, but so forward PE is 38. So this is, a highly valued stock. What do I mean by that? Like, I'm not phrasing that right. It has a high cost to invest in. I'm still not finding the right term for it, but you know what I mean. So 44 P is rather high. I think high 20s is what the S&P 500 is right now, right? I know Netflix is technically a tech stock, right? Are they? Entertainment. They're in the entertainment space, but I'd say they're more techie than not. With the analytics and stuff they use and just the amount of data they collect, I'd classify them as a tech stock. They're certainly more of a tech stock than like AMC or something like that. Nothing against AMC, right? But those I would assume are both classified as entertainment, but not both. I think Netflix is a lot closer to tech. So but the insane run and growth it's been in. I remember with these lows in 22, right? A lot of the thing was they were worried that, they're doing the shared, family sharing, and they're going to start cracking down on that. Everyone was just dogging on them, but they've really been doing well since then. And not all of that's just growth. Some of it is obviously inflation and the stock price compared to the earnings, but it's still probably been growing pretty well. So future earnings look up as well. Certainly in quarter 3 and quarter 4 compared to last time are looking up. And then quarter 1 25 and quarter 2 2025 are also looking up, but not as dramatic. So that's where some of the forward PE growth is priced into. I'm not going to really read it. Usually I read the company profile just so people can get a better idea of it, but you all know what Netflix does, right? They're streaming. So let's dive into some advantages and risks. Advantages. Netflix has huge name brand awareness, right? When you think of streaming, first you think of Amazon. Maybe then you think of Hulu, and then you think of Amazon Prime, and then you think of, Peacock, and you think of, there's so many now, Disney Plus, right? But if you had, what's the first company you think of when you think of streaming platform? I would say more than 50% of people would say Netflix, right? So, that's an advantage. Name recognition. That's very good. It is shows. People watch shows all the time, right? That's never going to go away. In 10 years, are people not going to be watching shows, right? In 50 years, are people not going to be watching shows or movies? I would be shocked. It may be in VR. It may be different, right? You could make that argument, but that's what you like to look at for long-term risk. Like, is this going to get phased out? Like, for example, with oil, right? People keep thinking oil is going to get phased out. It really hasn't. But in 50 years, could you theoretically say, we will be a lot less reliant on oil? I think there's a very good chance, right? There's a good chance we won't, climate arguments aside, right? But something like Netflix it's going to be around. Some risks, I guess. Competition, right? There's a lot of competition. I mean, I named 4 or 5 off the top of my head. Obviously, you could say there's advantages there and stuff, but it's tough when there's competition. And the good thing is it's cheap enough that if people really like them, they can get more than one, right? Probably most of you watching this have at least one, if not more than one, right? I know my family has Amazon Prime at least and Netflix, I think, right? So maybe some of you have no interest, but I would assume a large portion of people have more than one, and there's probably quite a few people that have like 4 or 5. So there's competition, but it's not like car, right? When you buy a car and there's 20 different car companies, and you can only buy one, and you're gonna have it for 5, 6, 7, 8, 9, 10 years, right? Competition's a lot bigger deal than this. Yeah, I mean, and just development. I mean, it costs money to make shows. I know that's kind of how they're trending, making a lot of their own stuff, right? A lot of those streaming companies are, Disney Plus and all that. They're trying to get as much just pumped out. Excuse me. Just as much content pumped out as they can, And honestly, they've gone the cheaper route than, quality, trying to make a hit. But they make hits too. And it gets people to sign up, and then they keep you. Oh crap! I have an alarm going off. That's embarrassing. But anyways, let's look at what some people think. So Schwab thinks it's going to perform well over 1 year. This was reiterated a little bit ago. What do I personally think? I cannot predict the future on stock price, right? I'm going to assume they're probably going to perform well. I wouldn't maybe have it as a top 13. I'd probably have it close to that 30 to 40 range. I think it'll be a better than average stock performer, probably just because it's on a great run. Although, I guess on the riskier side is if they do start losing, right? They have a couple bad quarters, maybe a bad outlook. You do run the risk. It has a track record of fairly recently. I know a lot of that was inflated because of COVID. I understand that, right? I'm not disagreeing with that. But it does have a record where if it starts missing, this thing could lose, it could drop to 20p. I mean, we can even look. I think it's under here. Yes. The PE's actually been... I guess that's only from 2023. I'd have to upgrade to see larger, and sorry, this YouTube channel doesn't pay enough bills for that. But I'm assuming, because the PE was even in the 30s there, that it was much... not as much as of a lofty evaluation, we'll say it like that. But yeah, I mean, this stock's going to perform well if they keep winning. Like, it's just gonna. I think they will. I think it'll be a good stock. Do I personally own it? I do not personally own it. Is it something I'm looking to buy? No, just because I wouldn't. If you gave me $10 million, would I buy Netflix? Absolutely, I would buy some Netflix. I would. So, but money's finite. I work a regular job, so I can't just throw money at every stock I like, or else I would have $5 in every stock, and then we'll just buy an ETF, right? And I do have ETFs, but I also have individual stocks as well. So anyways, ESG score, taking that what you want, buy, long, buy, 4-star, narrow. I would agree. I do kind of hate the 0, 3, 10 style this has here, but I'd say, 4 or 5 just because of name brand, but there is quite a bit of competition. So, and I guess money. You just gotta have money too. Let's take a look at analysts. Oops, wrong one. I don't take too much weight into analysts, but it looks like a pretty even split. 1/3 say really buy, another third say buy, and then I guess more like closer to 40% say hold or sell. So price target's actually pretty close, but personally, I don't look too much into what analysts think. If you do, great, right? But if analysts truly knew a company, like they just knew it, right? They knew where it was going to be, right? They wouldn't be like, oh yeah, I'm going to get paid to analyze it. They just do whatever they knew it was going to do, right? If they knew it was going to be at 7:30, right? Because they know the company so well, then they just spend all their time, trading the stock, right? Because they know and they don't, but they do have some insight that other people don't. So I'm not completely discrediting them. Anyways, I think that's all I got for today. I like Netflix. It's a good stock. It's not going to do you wrong. It's not one of them where like, I'm dying to buy this, right? But they're positioned well for the future, and they'll probably be one that's going to keep winning. Just be hesitant of, I guess, competition, and of if they start losing, this is a stock that can fall pretty substantially, maybe in a huge recession. Although I think during recession, they'd probably hold up fairly well. But it would just be the valuation of, mid-40s PE that I'm more worried about, more than necessarily what the company would do. Just the nature of things, a company that's a bank company that's going stagnant, assuming the recession doesn't hit banks. That's valued at 10 PEs, not going to get as hard as, a stock with 800 PE, right? Oh, that's a bad example because that's probably one that just became public. Anyways, so I'm enough ranting and rambling. So if you made it this far in the video, awesome. I appreciate you watching. I appreciate you listening. It actually makes my day that people spend time of their days listening to my analysis and all that. If you could leave a like and subscribe, that would help the channel so much. When people leave likes on videos, they just perform so much better. The algorithm just really rewards that. So if you did make it this far, and you did want to leave a like, I would really appreciate that. But anyways, that's all I have for you guys today. And I'll catch you guys in the next video. See you later.